if you look at the way monetary policy has been moving, the dot plot shows fewer members expect to cut rates. And this is how you can tell. You see the way those numbers go over there, and you see them over here in the middle. That shows the larger number of people who are now starting to be more concerned looking into the future than, say, for example, where we start at the beginning. Because it's rather difficult to understand exactly what happens. Now, Chair Powell cautions that these predictions were made very much with fairly low conviction, and that if there was ever a dot plot to skip, it would have been this particular one. On to the big board now, and you'll see the Fed chair repeatedly pointed out that inflation has been above target for the past 5 years, which of course is by no means an achievement. The comments help push stocks lower. That, of course, a direct interpretation that they are not going to cut rates further. David Malpass is with me. How lucky we are tonight. Former president of the World Bank, now vice chair at American Global Strategies. David, if I may, the problem here is we know the economic impact of the war is how long and how deep, and that's the great unknown. What are you making of it?
Hi, Richard. Difficult situations worldwide, but one thing I note is that the market fell more and more as it became clear that Chair Powell would stay on. And to me, the key issue is whether the Federal Reserve is going to do reforms. I've been a critic of their models. They don't work, and the inflation model in particular is not a useful model. So what's the market make of it? That the reforms are being delayed, which is problematic. On the positive side, one thing to make of it is markets are forward-looking, and there are some positive changes going on that will affect oil. One was the Jones Act waiver that was put forward today. I think that will have more impact than people realize, and that's good. Also, the Saudis are pushing more oil through the the pipeline that goes over to the Red Sea. And so that's an important exit point for Saudi oil and will add to global supplies. And you could add to that list. So there's some good things going on. The market is digesting it all real time.
Where do you think the risk basis is, though, bearing in mind the positive nature of what you've said? At best, they sort of negate the downside risk. And I think, would you agree that the risk is still very firmly aired towards the downside?
No, I'm not sure I agree with that. The risk is that day by day, Iran is still attacking the oil in the Strait of Hormuz, which is going to take time to resolve. So that is a daily risk. But the bigger issue is the risk longer term, and we've been in this before, that the Fed will keep doing its inflation targeting model, which has made such massive mistakes in the past. And so I think markets are looking at that prospect, that as oil feeds into gasoline, then the Fed says, well, that's a justification for higher interest rates, not lower interest rates. They were pretty decided on that, and the number of dissents went down today in the FOMC meeting.
You raise a very, very good point on this question of the Fed's inflation model, because Kevin Walsh has made it clear that reform is a big part of what he intends to do. Reaching agreement on what that reform will look like will not be that straightforward. But as you point out, to have been over your target for so long calls into question the way in which you're going about your business.
That's right. I think the Fed feels that if they just put rates high enough, inflation will go down, which is not really a viable strategy. So, I would like to see them recognize that inflation is backward looking and therefore not a satisfactory target for the Fed setting interest rates. Same thing on the balance sheet side. They're expanding rapidly the size of their balance sheet, which I think drains money from the short end of the curve and makes it harder to adjust to the supply chain needs of the economy. So they're going in the wrong direction on that. And in both cases, you have to create the foundation for a better, stronger Fed model that doesn't make the mistakes that they've made repeatedly in the past.
President David Malpass, former of the World Bank, will look forward, hopefully, pleased to joining us in the future so we can actually analyse the changes. I'm grateful for your time tonight, sir. Thank you.